I have with me Anthony Ko. He's the CEO and co-founder of MC Payments, a financial services technology company that provides merchant payment services and digital commerce enabling solution. So it operates in Singapore, Malaysia, Thailand, and Indonesia. And it's also the first digital payments services company that was listed at Catalist SGX earlier this year. The financial services industry has witnessed an accelerated adoption of contactless and digital payments in last 1 year. The e-commerce has boomed during the pandemic. Several national payment initiatives have emerged. Payments is also becoming increasingly instant, embedded, and invisible. Now, this is a constantly evolving space, and you as a company have got various solutions to cater to a range of payment methods that you offer to your merchants. Share with us some of the key changes do you expect to see in the third-party payment processing post-pandemic? Where is this industry headed? And what are some of the key innovations in payment technology that will have a significant bearing on the future of payment space?
Payment has come a long way. You know, it begins from, if we look forward from the cash to electronic payment, that started with the company like Visa, the traditional credit cards payment some 70 years ago. Third-party payments is moving toward first-party payment or second-party payment already. Why do I say so? You look at the regional countries and they start to regulate payment companies. In the past, we were not regulated. So central bank begins to regulate payment companies and calls the fintech provider. Fintech means a financial and technology fusion together as one. So we see that payments becoming more fragmented across the countries. So over the years, payments is not simplifying. In fact, it's getting more complex and more payment methods are occurring. Just Visa Master emerged for 70 to 50 years and with the goal to turn into cashless. Many years later, cash still there with some payment methods still there, but we have many wallet services and local payment methods that evolve. And you can see that more evolve and each country have their own payment methods. We would see that we play a new role for this new era. That's why we emerge as the fintech. And not only fintech, central banks see the importance of regulating this newborn baby in this next era, digital era. So our role actually is to simplify technology and payments together for the next phase of the digital transformation for businesses. Payment, why call third party in the past? Just that we depend on the bank to provide us a first party right now. So now, being regulated, our position actually moved back up to become acquirer ourselves. So being an acquirer as a fintech regulated company, we become the first provider that connected directly with various payment methods, such as Visa Master or even the local wallet payment methods or transfer methods. And I think the role going forward for fintech being a regulated entity is the new baby to provide for businesses to cope with the aggregated payment methods to be relevant for this era.
What are some of the key innovations that is being that you're seeing happening in the industry in terms of which should have a significant bearing on the future of payments? And how are you integrating those technology in MC Payments? So what are some of the innovations that you are undertaking at MC Payments? And are you also integrating technologies like AI and blockchain in your payment processes?
I mean, there is a clear distinction between online and offline. That means online, you talk about those in the running the e-commerce mall, and the online have evolved to end-to-end solution providing like Shopify that provide end-to-end hosted online platform for merchant to sell, even to the extent of drop shipping. Then for offline, very traditionally in Asia, we see that just only a POS terminal that is putting on the shop front, right? Be it the retail or F&B. But with the pandemic, you see that this landscape is going to change because the social distancing, shops got to be closed because of the pandemic. So business have to go on and to be relevant. So a lot of ordering had to be done, and remote ordering and purchases and deliveries. And this for physical businesses, be it F&B, retail, or whatnot with the stores, they have to evolve a new business solution or that is able to assist them to collect money or payments from their customers. So we see that the payments provider going forward need to provide end-to-end solution that cater to these specific industries, such that they are able to function even in this pandemic situation. So MC Payment, we have various solutions. For example, we have end-to-end F&B solution that cater for the F&B to run, be it online or offline. So our central platform allows them to create menus and generate a QR for the table, but now table they couldn't do it. They can use a QR for remote ordering and also quick checkout with the payments. At the same time, they are able to do deliveries or self-collect. So that kind of flexibility need to be there, and they are able to change the menu at the central database, and they know what product is selling with the data analytics and things like that. So solution like that is helpful for businesses to stay relevant in this pandemic. At the same time, payments should not be their headaches. We just add on new payment methods for them simultaneously or enhance when that's ready. So that allows them to be able to accept any payment method from their client. So that is the part of innovation that we are pushing forward. So we also did that for the retails and the other vertical industries. We do end-to-end holistic as a business solution. Other than that, we also did that for the transport and the charity solutions for them to provide able to collection, donations, and a payment of school fees, and also the certain tokenization, that means storing of the credit card credentials such that it allows the recurring payment securely. So these are features that we built to help vertical businesses to cope with this current situation. And we also recently launched the Facebook selling for the Facebook sellers. So Facebook sellers is a new form of selling for many of the new businesses because of pandemic.
Are you also integrating some of the emerging technologies like AI and blockchain in your current processes? And if yes, how?
Yes, it is in our pipeline because once we with the ordering data, it makes sense for us to build the AI and to do predictive analytics. So with just payment data is not enough. So you need the end-to-end consumer purchase order data. That means a good data, the consumer behavior data, to make sense out of the data analytics. And blockchain, we are capable, and right now we are in our pipeline. We have not rolled it out yet as a payment method. We had tried 2 years ago during one of the large events for the millennials to use, and is successful. But that was just a pilot in 2 years ago. But going forward, we see that there are emerging trend. Definitely, blockchain and AI will be the emerging trend together with payments as a holistic solution for businesses.
There are other companies that operate in O2O space, digital payment space as well. Say, for example, Red Dot Payments, 2C2P, OMICE, Liquid Pay. So there are quite a few companies. Now, in the acquiring business also, you compete with banks as well. So because a lot of banks operate in that as well. Tell us what are some of the unique features that you bring to the market vis-a-vis your competitors? How are you differentiating your services competitively in the market?
Those names are my peers that we started together. Mainly, they are still remaining either purely on the online space or as providing the terminal space. We differentiate ourselves first by being a regional player with multiple license regulated across the country. We aggregate all payment methods into a single platform, and also the building front-end vertical software solution for the vertical industries. And by building vertical industries software for the businesses, I think this is one of the main differentiator that we are different from the other players by providing end-to-end holistic solution. So we are positioning ourselves as a business solution player with integrated payments rather than payment players. And that is not only that, we add on our platform value added services to increase our competitiveness, increase our margin in that, so that you can see right from the start that we break our business in two parts. One part is the merchant payment services, which is all transactional related. The other part is the digital commerce enabling services, right? Which is software driven by vertical industry. As we see that going forward, the businesses need an end-to-end solution. There is no difference between payment. Payment is given already in the solution. So you see that businesses are looking someone that can solve their problem, and looking for the cost. Their central business is not about payments. Their business is about driving their sales in their food and beverage, or in their transport, education also. I mean, they do not want to headache about the payment methods, which is so fragmented. And what they need is, can you help me to drive more revenue? Give me more solution for my customer to use. And can you help me to lower my costs? That is more relevant to businesses of today. So how do we achieve that? We built a lightweight end-to-end solution for them. Say, look, you come to us, your headache is gone because you just one platform. You have a solution that help you to manage your point of sales, your payments, and the value-added services, such as digital marketing, which we provide to help them to draw customers to consume in the store, to sell their products, and to help them to do coupon redemption if they want the loyalty to keep their customer together on the platform, so that they can consume and returning customer to transact. Or they need recurring transactions securely, which we can help them to do that. At the same time, we have recently added on the buy now, pay later feature to help them so that they can have more businesses by helping their consumer to pay by installments. So all these are not payment payment method central, but more value-added services to us. So by providing a more holistic solution, focusing on solving merchant problem is one of the differentiator in country. So going forward, another differentiator that we try to differentiate from ourselves is that we will cross-border payment methods to other countries and do the permutation. PayNow is a local Singapore payment method. So if we can enable PayNow in Thailand, in Malaysia, in Indonesia, allowing Singaporean traveling to Malaysia, Thailand, Indonesia to pay by their local payment methods, and while MC Payment can handle the merchant settling in their local currency by accepting PayNow, that will be a scenario that we are looking in the future. And vice versa, Thai payment method, Thai QR, to be accepted in Singapore, in Malaysia, or Indonesia. And MC Payment, being a regional player, can handle this cross-border processing and currencies. So this will be the new trend emerging for travelers when they're opening up or pay by their local payment methods. How does this differentiate, and why is this trend growing? It's because by providing a local payment methods in other country, lower the cost of transaction for the businesses as compared to traditional Visa Master. right? So they can have a lower rate. So it's welcomed by the local merchant because the rate by itself is lower, and it's welcomed by provider like us because it increases our revenue because we now can participate in the foreign exchange, which in the past we can't, and that is provided by the traditional Visa Master or the American Express payment method. So give us more margin to be able to give a more holistic and higher gross profit margin play in this region. So that itself, that means we are given the assumption that MC payment need to be regulated and already obtain the license regionally and have the capability to do cross-border payments. So this is one of the differentiator and barrier for other payment companies to be coming on board to compete with us.
When do you expect to start this cross-border payment services, and which are the countries where you're looking at? So the corridors that you're looking where you will provide this cross-border payment services.
Right now, we can only provide across the country with when we have a payment license that we can do local acquiring and cross-border payments. And our technology solutions are ready, and now we are actually clearing some of the regulations and the exchange and the seamless payments. So we built a cash treasury that can able to handle the FX exchange in large volume and the settlement in volumes. And this is the part that we are enhancing and testing before we roll out. And because right now it's a pandemic, so that we want to see how the situation goes before we roll out the services.
You work across multiple industries, as you mentioned. So retail, then there's food and beverage, transport, I was reading, and you mentioned a few others here. How many customers do you have, and what is the kind of payment volume growth and customer growth that you have been seeing as a company, say in last 12 months?
We across, I think, about 2,000. We have just built in, that is excluding in Indonesia. I think Indonesia, we have another 10 over thousands. So in the region, mainly we have a large retail chain, like the Alpha Time Group and Zara Group and Watson, this type of large retail chain, and also aggregators with the large group that we are coming in. So we are focusing only at this point, enabling more payment methods and the value-added services on the same platform, mainly as such. That is, we are continuing enhancing. So because of pandemic, we had slowed down the acquisition. So we are only enhancing more on the current merchant base with more payment methods and value-added services.
And how big is your market share in Singapore?
Comparing only Visa Master, I don't think we are big enough. But alternative payment methods with that, I think we are sizable in the alternative payment method and the vertical and the emerging payment methods. I think we are taking some traction and coming forward, being a new player in the industry over here, in this case compared to the incumbent banks. So we are not competing so much with them in the traditional payment methods. We are more competing with alternative aggregated with value-added services for that. That's why most of our merchants are the tier one merchant, and we are now looking to working with the whole shopping malls to providing the whole end-to-end solution.
Now, see, the margins in pure payment transactions, they have been declining. So we're seeing, which is kind of pushing companies towards alternate modes, alternate models, embedded financing. You mentioned BNPL also. So, so overall in the payment industry, we're seeing the margins on a decline in pure payment space. How are you looking to improve the revenue profitability in this increasingly crowded space? What is needed to build a more sustainable and a profitable payment franchise in this scenario?
Many payment providers are thinking. That's why I think the strategy is going towards value-added services and aggregated payment methods. So traditional payment methods like the credit cards are squeezed in the sense that means they are squeezed to have a lower margin. but you are able to go to the local payment methods. In fact, you can the rates could be lower and the margin could be higher in terms of transaction. So when there is a payment behavioral shift, say for example in the past, if we majority of our transactions are coming from the credit cards, so we could have a higher top line because of the rates are higher, you're quoting, but the margin could be lower. So when the payment shift to local payment methods, in fact the revenue could drop because of the lower discount rate, right? Maybe from 3% to 1.5. So you need a double volume to keep the sum. So the revenue could drop, but the payment margin GP could increase, right? It could increase because local payment methods probably could give a lower cost and it could give a higher GP. So we are experiencing that in a sense. So we have a mix. At the same time, if we provide like what we say value-added services, digital commerce enabling services, that will help us to balance off the recurring SaaS model, recurring revenue in terms of GP. So for that, we are still able to maintain. In the past was 36 to 42% GP, but we do with the payment method increase to 50 over percent GP, right? So GP could have increased in that because there could be a shift in the payment methods as well. So these are complex, and also the payment methods depending on the payment provider themselves driving the volume, because they give a lot of incentive to the consumers. So this behavior, also the payment methods themselves are competing amongst each other. So for us, we are agnostic. We aggregate all of them. So sometimes we see that a shift in payment methods, but from a merchant, depending on which one is pushing that better. So we can shift that, and that is not within our control. But what we are in control is that we hope to provide a holistic, aggregated, unified end-to-end solution that are not payment dependent and more consumer transaction dependent. So we want to build a stickiness and a solution for the businesses.
Within your business model, what percentage of your revenue is coming from merchant payment services and what percent is coming from this digital enabling solutions or B2B, the value-added solutions that you're providing?
Right. For last year, we have about 80% of merchant payment services from transaction, about 20% digital commerce enabling services. I think going forward this year, we have about 70-30. So our digital enabling services seems are growing in the sense. So going forward, I think in the longer run, we can see that they will balance off, because we see that the digital enabling services as an end-to-end will play a more significant role, more relevant role in this whole ecosystem.
Are the margins, the profit margins significantly different between merchant payments and digital enabling solutions? Just give us an understanding of how the profit margins vary.
For the merchant payment services itself, the GPs also differs, varies from country to countries, payment method to payment methods. For country like emerging, the margin is a bit more competitive in terms of local payment methods itself as well. So it's very squeezed. So even if local to local, sometimes we can't even make money in the sense, I would say, but we need to make money from the value-added services, SaaS model, recurring stickiness, digital marketing, that will balance off, right? If there is a cross-border payments for us to do supplier payments, and that we will make back by the subscription, by the FX and things like that, giving back the margins. So these are complex, but in the whole, as I said, we still maintain about 40 to 50% GP for MPS, and similarly, I think about 50 to 60% for DCES as a whole.
In Southeast Asia, we're now seeing bilateral arrangements for cross-border payment between countries. For example, PayNow in Singapore and PromptPay in Thailand. Now, given the problems of different regulatory requirements, interoperability issues, what are your views on possibility of integrated ASEAN payments? What are some of the key challenges in this whole process?
ASEAN itself is trying to build a central network that is connected for ASEAN payment to use, but I think it's still in the quite initial stage. And one main challenges is being many countries and different various payment systems. So for it to progress, it may take some time. I think that's one of the main challenge that it is. And even if they in time to come are able to successfully form an ASEAN network and seamless payment, and that is only one payment method that we can add on, right? So now, given many other emerging payment methods that run by the wallet services, it doesn't help the businesses in terms to come at this point in time. So by the time when it's ready, we can always add on the payment method to do that. But being that at the moment, life still need to go on. So merchant need a solution to help them to cope with current situation and to aggregate as much. And now, as you see, that don't have a dominant player, they're providing everyone trying to be the one coming forward. So we are one of the early movers, and going forward, we see that the industries are still able to accept or accommodate a few players in these industries. So it's big enough to have multiple players of such providing to the whole ASEAN market.
MC Payment was among the first digital companies to be listed on SGX Catalist. Yes. So, and it took you almost about 3 years for the entire process to be completed from start to end. What were the challenges in the process? Why did it take so long? And what is the main thinking behind getting the company listed? What are you trying to achieve? So give us a sense of that.
When I started the company, is quite early days. I think it's about 15 years ago. At that point, they do not have fintech. So we started slightly way earlier than the new fintech companies are coming on board. So that is one of the differences that we have. So while the time that we are exploring various solutions such as listing, trade sale and things like that, and the listing or RT option came into play, but the main driving force is for MC Payment to scale up and to grow and tap on the capital market to grow. Reason being, we see that there could be or will be payment consolidation or congestion in the market. So either we grow the bigger or being irrelevant in the market. That was the driving force behind to grow to become a leading player in the region. And just that we have been offered this reverse takeovers opportunity, and the shareholder voted for it. So we embarked on the journey. That was one of the driving force. Your next question on why it takes 2-3 years. In fact, first is that if I'm not wrong, 2017 we signed we call the intent. I think only 2018 we signed the sale and purchase. So it takes some time to get the legal contract on place to kick off. Then when we kick off in 2018, we do because we are across the countries, so we need to get a lot of compliance and legal DD licensing across to be the process itself for the professionals or to fit the SGX regulations requirements. So in countries like Indonesia, Thailand, the structures are a little bit more complex. So it takes us some time. So before that, we have more countries which we think that is not viable. If not, will take us longer time. So we take some time to clean up the country to focus on a few various countries so that is more neater for us to move forward to comply to the SGX rules. So all these are the why it takes some time. So by the time we are almost to complete, the timing is an issue, and the audit is compliant. We want to complete the that means a 3-year growth trend. That's why we push a little bit to let the audit complete, so that just nice in 2020, right? I mean, we complete the last one. It seems like it is a long haul process, but because we are multiple regional country, that takes us some time for the various jurisdiction to clear, and it all depend on different phases. And that was one of the time that there are many dependencies, that lead to the time. That's one. And while we have just did the SPA in 2018, we also did the exercise of acquiring iFashion Group at a point in time, and subsequently we didn't complete the transaction, and the transaction took us a year. That was also part of the delay, and ultimately it takes us more time, and we decided to drop off because it's delaying the process.
The fact that you were getting, you got payment license in Singapore by last year, end of last year. So did that also impact your timeline?
Yes, definitely. You hit the point. This is the number 3 point I didn't mention, because by the time we are about to complete, Singapore implemented the Payment Services Act. So to be the first digital payment player to be listed, being a licensed provider is becoming a key. So by the point we are not given the license yet, so we technically, the exchange would not want to list a company without the license. So by the time we have to wait till SGX or rather the MAS award us a license, then we are ready. So we are being only awarded 1st of December 2020.
So, and what was the funding that you had raised before listing, and who were major investors?
We had did 10 million share at 40-cent placement, raised about 4 million. In fact, we only raised the amount for the RTO expenses and pay off one of the convertible debt, and we have not raised any as yet for working capital. We are still depending on our own cash flow or working profits to generate itself, because we are cash flow positive. So we are looking for the next raise or so at the time when the time is needed. So we just do a minimum raise at that point.
You were profitable in first half of 2020. How were you funding the operations if you had not raised the funds by an external investor?
Prior to 2017, we do a pivot. That means we had turned into purely digital. That's building infrastructure and getting ready. And also at the same time, we're applying for the license in the region. So that was one of the part that we burned a lot of money for 2 years. We need to get the license in Thailand, in Indonesia, and those are investment. So that contributed to the loss. And subsequently in 2018, when we go at RTO, we funded the whole, mainly of the whole RTO by our own cash flow operations from that, and leaving some for to raise and to be paid off.
So you had not raised any Series A or B earlier prior to that, right?
We did. That was prior to the RTO in the early days. That was in quite a number of years ago. And so far, all in all, as for 15 years, we raised about 20 million or so only.
Okay.
Very little to achieve this portion of part. And going forward, I think we should look at a bigger raise. So we hope to scale up, and right now, I think the main focus after our listing is focus on the reach and the depth and the scale. I think that should be the next step of things, and not so much looking at being a fintech company, as long as we have enough cash flow operation, and that should not be of our concern, because time to come, we are still very confident. At this present moment, we are first movers. We can scale up multiple times as a being comparison of many other global payment players. I think we are still a small baby, and then we can grow many times.
Give me a sense of your future plans, your roadmap for geographical expansion in the region, or your vertical expansion. How are you looking to scale your services?
2 prongs. One is to deepen our solution across the region. That is part of the plan organically. The other part, we are looking at inorganic by buying companies or merging or scaling up into other geographies, maybe into Philippines, Vietnam, even Korea, things like that. That we can scale up to be a global, rather a regional first before we turn into a global company, right? So we take a step. So that's the reason why we say that we still can grow multiple times in that. So this is the part that being listed gives us the advantage to scale up in that manner.
Thank you so much, Anthony.